Welcome back. Before we take a look at the day's business news, let's take a look at the stock indices across the GCC. Organised by the National Bank of Abu Dhabi, the 6th Annual Global Financial Markets Forum for 2014 has opened with speeches by influential UAE policymakers, as well as the former US Secretary of State James Baker and the former US Fed Chief Ben Bernanke. In his speech to the delegates, His Highness Sheikh Nahyan bin Mubarak Al Nahyan, the UAE Minister of Culture, Youth and Social Development, said that GFMF's prestigious and highly sought after speakers confirm that the UAE is established as a strong economy and is fast becoming one of the most influential nations of the world. Delivering the welcome address, His Excellency Nasser Ahmed Al Suwaidi, the Chairman of Abu Dhabi Department of Economic Development and Chairman of NBAD, stated that the forum continues to establish itself as a highly recognised gathering. In relation to the UAE as a financial centre, the conference highlights Abu Dhabi's robust and successful finance heritage, with a portfolio across asset classes, geographies and sectors responsible for more than $1 trillion of assets. The US economy was also in the spotlight as the former chairman of the US Federal Reserve System, Dr. Ben Bernanke, said he believes there is a good chance that the US will grow at around 3% this year, just as it did in 2013. James Baker, the former US Secretary of Treasury and State, added that the US can replace Russia as the world's largest natural gas producer and Saudi Arabia as the largest oil producer. Mr. Baker, who was also a keynote speaker at GFMF 2013, said the US must address its deficit and growing debt. The US Republicans said both American parties must strike a grand bargain to achieve it.
Our vision for a sustainable economy means adjusting our policies so as to encourage the formation and success of small and medium-sized enterprises.
It was a very interesting day. We kicked off the conference by talking about Abu Dhabi and the role Abu Dhabi within the global context and the diversification projects Abu Dhabi is trying to do and the deviation of what Abu Dhabi is trying to do in comparison to other Emirates and with other countries within the region. The main topics that we've discussed is Abu Dhabi global markets and what they're trying to do in terms of market making, creating a center of excellence, creating international standards and becoming the connecting hub between Asia and Africa.
Dubai's hotels welcomed more than 11 million guests in 2013, an increase of just over 1 million on the previous year, in what has been hailed as a positive sign the Emirate can achieve its goal of 20 million visitors annually by 2020. The Dubai Department of Tourism and Commerce marketing data showed guest numbers across all hotel establishments between January and December reached 11.01 million compared to 9.96 million recorded in 2012. Of this, Dubai's top 5 hotel guest source markets were Saudi Arabia, India, UK, USA and Russia. The Australian market experienced the most growth, with numbers up by 39% to more than 269,000 visitors in 2013, a result largely attributed to increased flights following the partnership between Emirates Airline and Qantas. The DTCM added that Saudi, consistently Dubai's primary source market, experienced further growth, with visitors up by 19.9% to 1.35 million. Additionally, the Chinese tourism market also grew, with visitors up by 11%. The data showed revenue for hoteliers and hotel apartment operators also grew by 16.1% overall, reaching 21.84 billion dirhams in 2013. Total guest nights also increased by 11% to 41.57 million, while occupancy rates for hotel rooms and hotel apartments increased from 78% to 80%. Occupancy was 82% for hotel apartments, up 6.5% compared to 2012. Middle Eastern carriers posted double-digit air freight growth during January, according to data released by the International Air Transport Association. The region's airlines saw cargo volumes grow by 10.7% year-on-year on the back of the growth in Europe and other regions. Globally, IATA reported a strong rise in air freight growth compared to a year ago. Global freight ton kilometres rose 4.5% in January compared to the same period in 2013. This was a significant acceleration on the 2.2% year-on-year growth rate recorded in December and was well above the 1.4% full-year growth reported for 2013 as compared to 2012. Growth was solid across all regions, with Middle Eastern carriers growing the fastest, and European airlines continued to benefit from Europe's recovery from recession, posting a 6% growth. Carriers based in the Asia-Pacific region, which account for nearly 40% of the global air freight market, reported 3.8% growth. This represents a major improvement over the 1% contraction in 2013. And Etisalat, the UAE's biggest telecoms operator by revenue and subscribers, posted a 70% rise in fourth quarter net profit on Tuesday after it took impairments on Nigerian and Indonesian operations. The company also said it expected to complete a €3.9 billion purchase of Paris-listed Vivende's 53% stake in Maroc Telecom, plus €300 million in 2012 dividends from the Moroccan firm by the end of May. Etisalat, which operates in about 15 countries across the Middle East, Africa and Asia, made a net profit of 1.45 billion dirhams in 3 months to December 31st. Its foreign operations accounted for 33% of revenue in 2013, up from 28% a year earlier. The company's 2013 full-year net profit rose to 7.08 billion dirhams from 6.74 billion dirhams a year earlier, according to a statement to Abu Dhabi's bourse. The company had 148 million subscribers at the end of 2013, an increase of 9 million from a year earlier, and has proposed a cash dividend of 0.35 dirhams per share for the second half of 2014.